Hey everyone, me Kevin here. Let's talk about investing trends for the week ahead. Are we going to see boom or are we going to see bust, and where should we be paying attention? Well, the first thing that we want to keep an eye on is the fact that the United States and China are absolutely crushing it. So if you were thinking to yourself, man, should I really be investing in emerging market stocks, or am I okay to just be focusing on the US and maybe a little bit of Xpeng and NEO and the Chinese stocks? Well, a lot of folks, based on current data, would say, you know what? Stick with the US and China. And that's because France, Germany, Italy, the United Kingdom, Japan, all of their economies are contracting. Countries relying on tourism and services are suffering the most. The United States has 1/4 of their population vaccinated already, and at the same time, emerging markets are getting devastated because the better the US does, the higher interest rates go in the United States, which makes it more expensive for emerging markets to service their US dollar denominated debt, and it makes it even harder for them to recover. This is leading folks to estimate that by 2024, output in emerging markets will still be 3% lower than what we had before the pandemic. That's not good, but that is also leading a lot of people to say, you know what, I guess it's totally okay for me to focus on US and Chinese stocks instead of everything else. And that is unfortunate for all the other countries in the world. I think we're going to hear a lot more about these divergent economies in the weeks ahead. Now, another big trend that's happening right now is something that Bloomberg just reported, and that is an indication that an index tracking 37 of the most popular meme stocks found that over the last 2 months, we've been pretty much flat. And this is now leading Bloomberg to headline articles that are suggesting we should expect a big reckoning, quote, big reckoning, they said that, not me, coming in meme stocks. They're specifically targeting AMC, Express, Zomedica, the veterinarian company, if I didn't mention it, GameStop, and AMC. These are some of the big names, obviously, in the meme stock movement. We've seen crazy movements in these. Also, of course, Sundial. But the top 37 of these popular meme stocks that are being tracked by Bloomberg have basically flatlined over the last 2 months, and they're suggesting that this could be the end of that meme stock trend, and we could be expecting some big falls or corrections in any of the meme or momentum stocks. They could be wrong. Wall Street's been wrong before, but they're sending a big signal or sort of a big red flag warning for these particular stocks. Now, we do have a lot of other trends breaking as well, and the easiest thing to do here is really just to look at some of these trend changes that are happening. Let's go ahead and jump on over and see exactly what's happening here. So in the last 6 to 10 weeks, we had a big explosion in people searching for investing in stocks, but this is now wearing down to where we're getting to 6-month lows and a lot of interest in investing. Investing in stocks is plummeting. Real estate investing has been flat. Searches for ammo are decently up, not at high peaks that we've had recently, but they're definitely up. Searches for flights have not recovered yet to 2019 levels, but they're definitely up substantially here recently. Searches for ZOM, Sundial, GameStop, AMC have definitely trended down, especially from their highs about 6 to 8 weeks ago. We've got searches for penny stocks down substantially. Searches for cryptocurrency down. Searches for crypto decently high over the last 6 months. I'd definitely say we're still hanging out at high levels, not at peak levels, but at high levels. DeFi kind of falling down a little bit. Bitcoin trending still up, still good. Ethereum still good. NFTs, all-time highs on NFT-related searches. I would not be surprised for us to hit new highs in NFT-related searches, non-fungible tokens. Day trading, 6-month low. Swing trading, almost a 6-month low as well. Option trading, about to break that 6-month low. SPAC, so special purpose acquisition company searches, down about to a 6-month, maybe about a 5-month low, I should say. Vaccine searches through the roof. Searches for ARK Invest plummeting. Searches for ARK Invest really peaked around February 16th when the market was at its highest. And of course, as the market falls, people are less interested in ARK Invest. It's kind of the opposite of how things should be, but that's how it is. Searches for Trump, all-time lows over the last 12 months. Searches for Biden compared to Trump, also pretty much at all-time lows over the last 12 months. Searches for suicide, for some reason, have jumped in just the last 3 weeks, which is very unfortunate. Definitely talk to somebody if you were having any kind of feelings at all, negative feelings. Talk to somebody. Keep watching positive videos. Shootings are up, unfortunately. Searches for shootings are up. Searches for Nike are bumping a little bit here in the last few weeks. Home gym searches have trended down a little bit in the last couple of weeks here. Peloton searches also down a little bit in the last couple of weeks. However, searches for Peloton treadmill are at relative all-time highs, which is pretty incredible. You've got searches for Etsy still really, really strong. You got searches for Wayfair not as strong as we saw. Searches for storage are relatively up, although I didn't do self-storage here, so that might be a little bit of a misleading search. Do-it-yourself trending down. Sell home at all-time highs over the last really 5 years here. We're peaking. Sell house relative to buy house, also both of these all-time highs. Moving company, definitely on the uptrend here over the last 5 years. Searches for Tesla, also somewhat on an uptrend over the last year here. Searches for Volkswagen spiking. Ford, kind of flat. GM kind of flat, stimulus falling. Searches for unemployment trending down, savings account actually trending up over the last 5 years a good amount. Searches for variant, like COVID variant, up. Spirit Airlines up, but not 2019 levels. American Air, same thing. Delta Air, same thing. Delta actually probably the closest to getting to 2019 levels. Searches for sell stocks and buy stocks have actually kind of fallen here, and searches for inflation are definitely elevated over the last 5 years. So it gives us a little bit of an idea what some of the trends are that we're seeing right now. Some of the other things to keep in mind are that this week we are expecting to get an update on durable good orders. In February, the durable good orders, this would be things like cars or larger appliances, this orders measure unexpectedly fell 1.1% in February, month over month. This is despite having a forecast of durable good orders going up 0.8%. February's was our first decline in 10 months. And a lot of that was due to cars being down 8.7% because of this massive car shortage. Wouldn't be surprising if we see another negative set of news on durable good orders, and that's coming out Monday at 10 a.m. Eastern, so that could have a little bit of an impact in the market there. So if you're looking for a shorter-term catalyst, mark your calendar, 10 a.m. Eastern. Durable good orders on a Monday morning. At 10 a.m. Eastern, we also have the monthly manufacturers' shipments, inventories, and orders report. This has been up 9 months consecutively. We're up 2.6% month over month in January. It's probably too early to see an impact of the Suez Canal if we're even really going to see an impact. There was a lot of talk that as long as we got that ship freed by Monday, we shouldn't see too much of an impact. Ship did get freed by Monday, so that's good. Another catalyst coming up is on Wednesday. We have the Federal Reserve releasing their minutes from their prior meeting, but they don't have any meetings or speeches coming up, so that's kind of old news. And then really, to sort of put this all together, it seems like it's quite possible that over the next week to a few weeks here, we might see a little bit of sort of an anti-momentum stock movement. We could see a pro-airline stock movement. We hopefully will see a pro-tech movement again, but that could be heavily dependent on what bond yields do. We'll see. And we'll see if crypto can keep some of its momentum, or if we've kind of peaked on crypto and we're going to keep focusing on that recovery trade, specifically like the airlines. I do hope that things will be relatively relaxed going forward, but that is just a hope. We have no idea. Relaxed and healthy would be a nice 2 to 3% gain, every so often throughout this week and maybe the next few weeks, rather than seeing these insane euphoric 10% gains, which tend to be followed by crashes. Anywho, this is a little bit of an outlook for the week ahead. I don't see any negative catalysts for a big crash coming up. I would expect volatility, and hopefully volatility that averages up. That's my expectation based on what I'm seeing. And if I were exposed to momentum stocks, I'd probably consider reducing a little bit of exposure, unless, of course, you're looking to buy the dip. But for example, if I were going to fundamentally invest in something like ZOM, I might potentially wait a little bit to fundamentally pull the trigger on a longer-term investment in a momentum stock. at least with how trends are pointing to a potential pullback again in those like Express, AMC, GameStop, Zom, and so on. So keep an eye on those emerging market funds as well. A lot of folks have index funds that are exposed to emerging markets. Maybe that's a buy the dip opportunity, but not if it takes 3 or 4 years for the emerging markets to really circle back. You'd be better off picking up, in my opinion, some discounted tech plays. Especially look at how Etsy and Tesla are still performing in trends. And those searches for Peloton treadmills, folks, when people are upping their searches for Nike and gyms or health-related goods, it's maybe a sign that as we reopen, people are going to be interested in getting into shape. And who knows, maybe we'll actually see a little bit of a boom in not only exercise equipment, who knows, but certainly exercise clothing. So some investing ideas. Anyway, thank you so much for watching. If you found this helpful, consider checking out my perspectives on helping you build wealth in my programs linked down below. You can use the amazing coupon code TOTHEMOON linked down below. I appreciate all of you for watching, and folks, we'll see you in the next one.